Lesson 11, Why to Watch the SPX Charts. In Lesson 11, you will learn why to watch the SPX charts and how to trade the S&P E-minis based off the SPX charts. Okay, so one of the reasons you want to watch the SPX along with the E-mini S&P futures is because SPX is the index, okay, that the E-mini futures actually are based off of. Okay, so you can't actually trade these futures, okay, if you try and pull them up in your platform. Okay, they're only pit traded. So what happens is this is also a cash index, okay? It's a rolling index, which means that it's always going to be what the overall true market is, while the E-mini future E-minis are actually these contracts expire every 3 months. Okay, now they might be trading for the next year and a half or so, but every 3 months they expire for that contract specification. Okay, so right here on the chart, on the left-hand side, we actually have the SPX, and then we have the E-mini S&P futures. As you can see, they're exactly the same chart, okay, pretty much. But if you look right here, okay, and let me grab an arrow, okay, if you look right here, you will see that the SPX is in 1942.04, while the E-minis are in 1943, okay? Well, one of the differences is we're coming up to the September expiration, okay? And with September expiration coming up, these two numbers will be identical come the day of expiration, okay? They become the perfect trade. So because there's what you call cost to carry. Well, if I change this contract to the December contract, you'll actually see a big difference. So /ESZ5, right? Well, now if you look at these contracts, it's 1933 by 1942. So right now there's about a $8 cost to carry difference. Okay, so starting next Friday, when this current ESU5 contract expires, that contract goes out cash settled, disappears. Okay, and the new contract is going to be about an 8-point difference from what the current contract is, okay, to the SPX. Well, the interesting part about this is what's going to happen, and it's probably one of the hardest things to get across and to describe, but also for you to truly understand, is it's a cost to carry this future contract, because within 3 months, come the March expiration, okay, so in December, the third Friday of December, this contract is actually going to expire, okay, the Z5, and we'll roll out to the March contract. And what's going to happen is you'll be 8 points under, but this number and this number will be identical. Okay, so it's almost like time decay coming out very slowly over the next 3 months. Okay, so it's always a drag, you could say, okay, or that costs to carry. It's like a storage fee or on other futures, but in this case, it's going to be more of a holding fee. Now, the reason I like to trade using the SPX charts in connection with the E-mini S&P futures is because one of the things is this is always a regular trading hours chart only. SPX only trades from market open 9:30 a.m. till 4 p.m. Okay, once the market closes, it's done. But this is going to show us gap fills, right? It's going to show us the real support and resistance levels, okay? So what I tend to do is I actually will draw lines all over the place, okay? Now, here's a trick, okay? Because remember, this is actually going to overpower these prices, will actually overpower these prices. And what I mean by that is they actually respect trend lines and trend levels a lot more than the E-minis will. So what I do, and let me draw them on this chart, okay? So now we actually have a whole bunch of levels, okay? And with these levels, what we have is you could see the way I like to draw them is I'll mark swing highs and swing lows. That's all I do with this. Or gap fills. So right here we have a gap that needs to be filled, okay? Earlier today we actually had a gap that had to be filled. And it's amazing how well they work to trading the E-minis, okay? So let's give an example right here, okay? This was, and one of the things with the SPX, it won't actually show you the real gaps, okay? Because what happened was we actually closed here and then we opened way up here. It just shows one large bar, okay? And sometimes the number skewing of it is going to be a little off, so you got to be very careful with that. But all I do is I put my mouse over, okay? Now look at the closing price up here. And that's going to let me know the close on this day was 1921.14. So I'm going to put that 1921.25 as a gap fill. Okay. And I usually round up if it's coming down or round down if price is underneath, right? So to kind of give me that little edge in case it comes a tick or two before. But so right here, we actually had this swing low from yesterday, 1946.50. And if you kind of look at what price did, okay, if 1946.50 on a smaller time frame, you'll see price actually came right down to it, okay? And then we actually had nice, decent rally off it. Well, the E-minis are acting the same exact way, right? So I like to use them, but I like to use this as a 15-minute chart, 20-day regular trading hours only, okay? And the only thing that I have is a 200 period exponential moving average on here because price actually reacts very well to it. Price came down, okay, and then we start to rally from it. Okay, it's kind of like come down, we rally, but a lot of times if we start to rally, we'll come right to it in the trending market, and then it's a great opportunity to be short. Here's the thing, you might look at the E-minis and you might not actually see a short there, but all of a sudden price will stop and reverse, and it's a great way to use this chart, these support and resistance levels, right? So we could see, we kind of had the hive day here, right? We fell, we pulled back, kind of did a tabletop, okay, where it's a double top, resistance, and then we failed, right? Did the same thing here, failed. Well, on the way back up over the next couple days, these will act as resistance levels because this is what the professional traders and also the algos, the big traders are looking at. They base all their trades off of the SPX chart. I base mine some off them, and then just more for confirmation when I see specific things actually line up, okay? Also, I have regular trading hour pivot points. Okay, and these are just the regular pivot points, as you could see right here, just a regular pivot day points, okay? And I'll just leave them right here. The other thing I add is my waterfall trade, okay? Because These are actually perfect for real clean waterfalls on the 15. So I don't need to look at a 15-minute E-mini future chart. I just kind of could base everything directly off of this chart. So it kind of gives me that edge. Also, my 50% retracement. Okay, because this chart trades very clean. So a lot of times double bottoms, right? You could use this chart for. You could use this chart also for trend lines. Okay, you could draw a trend line like this. A lot of times it'll respect it very cleanly. Okay, more so than this chart over here. Okay, so there's things, so right here you could see we only have one touch, but here we actually have a touch here, a dip, and then look at where price closed right off that trend line. Okay, as for this, you didn't see it because you have a whole different number. But let's look at this current contract. Okay, and see how it trades. And if you actually look, it actually doesn't trade as clean, right? We breached it on here, but on this contract we didn't. So again, these are just some of the reasons why I like to use the SPX chart. My suggestion is play around with it, look at it, draw your trade levels, and like I said, keep it really basic and really simple with this. All you need to do, draw swing highs and swing lows. That's it. You will, and then also gap fills. You will be amazed how price reacts to all these levels. And what I mean by swing high, swing low, right here, right? Fail or pull back, and then we rally. I put a swing low there. Right here, a swing low level, right? Right here, swing, pull back, and then we rally. Okay, that pullback acted as a support level today that I showed you for a quick bounce. Once it breaches, this line right now, I might move up here to the latest swing high. Okay, before we broke down and failed, right? So all I would do is I would measure this number, 1960.75, we'll say, edit. Just change this 1965.75, click OK. Oh, actually, sorry, 1960.75. Go like that. Come down here to drawings, save drawing, and I already have it named for my SPX. Click OK. Okay, and that's all you need to do. And that's all you do for doing the, drawing your support and resistance levels. You will be amazed how well these lines match up while trading the SPX. Also, look for patterns, right? Something like this. You could play, and then something like this. And look, we now have a nice wedge. We poked our head, but we failed immediately. Now we're probably coming back down here, and I wouldn't be surprised to see us retest these lows over the next couple of days. That's the market environment that we're in, but that's also what the chart is telling me. So I hope that helps, and next up will be lesson number 12.